Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Friday, January 28th. Stocks are hovering around the break-even line in early trading, following data on economic growth. The preliminary reading of fourth quarter gross domestic product showed that the U.S. economy expanded at a 3.2% rate. That was faster than the third quarter's 2.6% growth, but a bit below expectations. The big story over the past 3 months was the pickup in consumer spending. It rose 4.4%, the fastest pace since the first quarter of 2006. For the full year, GDP advanced 2.9%, the strongest growth in 5 years, and head and shoulders above the 2.6% drop in 2009.
Investors are also reacting to another round of fourth quarter earnings. Perhaps the biggest name on today's list is Ford Motor. At first glance, Ford's quarterly report seems like all good news. The automaker earned $6.6 billion, its best performance in more than a decade. For the full year, sales jumped 20%, and strong demand for its F-Series pickup trucks made Ford the top-selling brand in the U.S. But the results fell short of Wall Street estimates, sending the stock down more than 5% in early trading. Meanwhile, Chevron topped expectations with a 70% jump in fourth quarter profit, thanks to asset sales and strong growth in its exploration and production business and its refining operations. Chevron's total sales rose to $52 billion during the quarter.
A couple more big names reported quarterly results after Thursday's closing bell. Microsoft posted a slight drop in profit from the same period last year when strong demand for Windows 7 boosted the bottom line. However, revenues rose 5%, helped by the performance of the new Kinect video game device and Office software. Shares of Microsoft are little changed on the news. But Amazon.com is tumbling more than 6%. The online retailer posted an 8% increase in fourth quarter earnings, thanks to strong holiday sales. But Amazon's operating margins came in below expectations, prompting William Blair to downgrade the stock to market perform. But Citigroup said it typically buys Amazon on any 10% corrections.
Keep an eye on shares of Honeywell International today. Its fourth quarter net income more than doubled, driven by demand for its aerospace and transportation systems products. Honeywell also raised its earnings forecast for the full year. Meanwhile, Sara Lee is losing more than 1% after announcing it plans to split into two companies. The North American retail and food service businesses will keep the Sara Lee name, while the beverage business and international operations will be spun off into a new company. Sara Lee also said it will pay a dividend of $3 a share in fiscal 2012. Funded by the sale of its North American fresh bakery business.
Finishing up in the telecom industry, Verizon Communications is buying Terramark Worldwide, which operates data centers, for about $1.4 billion. The $19 a share price tag values the company at a 35% premium over Thursday's closing price. Terramark is jumping to right around that level now, and Verizon is slightly lower. Meanwhile, Verizon's competitor AT&T is also falling, after losing more than 2% yesterday. UBS and Cowen both downgraded the stock to neutral after AT&T reported a sharp drop in fourth quarter earnings and disappointing wireless growth. That's the latest from Weiss Research. Have a good trading day and a great weekend.